So in just 60 minutes I will cover entire microeconomics. So if you are interested in learning the microeconomics in 1 hour, do subscribe and let me know your opinion about this lecture, because this lecture is going to be very interesting, and in very short time I will cover all the chapters in the 12th standard microeconomics, right? So without wasting much time, let us start this chapter. So first chapter is basically introduction to the economics, and introduction means we will learn a very basic very basic economic model. What are the central problem of economy, how the economic activities are organized, there are various ways to organize the economic activities, what is the difference between the positive and the normative economics, what is the distinction between the microeconomics and macroeconomics, what is the production possibility frontier, scarcity and opportunity cost. So all these concepts will be covered in the chapter first. So let us start. So simple economy is a basically a model of a simple economy where there are only two economic units, such as a business firm and the household. Now household provides land, labor, capital. For simplification, we will say that household provides labor to the business firm and business firm provides wages or salaries to the household. Now what this household do, it spend all its wages and salaries on the consumption of goods and services produced by the business firm. That way business firm generates revenue, right? So this is how the production of goods and services and money flows in the economy. So this is a very simplistic model of a simple economy for your understanding. Now let us move to the another important concept, that is a central problem of economy. So scarcity and allocation, or a problem of choice, these are the central problem of economy, and this problem decides what to produce, how to produce, and whom will get the product, whom will get the goods and services. Let me show you how this happens. So any economy, take for example, take the richest country such as USA or China. So take any economy, they always have a scarcity of resources. That's why USA runs behind the resources in the Central Asia, right? Because nobody has an unlimited amount of resources, but the human wants are unlimited, right? We want all the health services, we want educational services at free of cost, if possible, right? We want to spend because we have unlimited wants. Because of the scarcity of the resources, we have a problem of choice, right? Problem of choice. We have to because we have limited resources, we have to choose between the different combination of goods and services based on our budget, and because of that there is a problem of allocation. See, for example, take for government of India, we have around 30 lakhs crores of budget. In that we have to decide whether to spend more on defense, whether to spend more on education or health or social sector, right? So that's the problem of scarcity and allocation. Now organization of economic activities, there are two simple organization of economic activities, such as centrally planned economic activity, the Soviet era economy, right? And that was a centrally planned economy. Such as China we can take right now, China is a centrally planned economy where government on the top decides how the economic activity is to be organized, where to spend majority of the money. Like take for example a Eastwhile Planning Commission. In Eastwhile Planning Commission that India had used to decide where to spend more money on, right? In the first plan they decided to spend more money on agriculture. In the second plan they decided to spend more money on basic goods and services, right? So that is how the centrally planned economy work. On the other hand, there is a market economy where government does not control much of the economy, rather government act as a facilitator, right? Government act as a facilitator. It creates infrastructure, it incentivizes some certain sector, right? And it facilitates economic activities, and market forces decide how to produce, what to produce, and whom will get, right? So generally economic activities are guided by the market forces in the market economy. Now the positive economy and normative economy basically explains the economic phenomena as they are. And normative economics involves value judgments about what should be earned based on opinions and ethical consideration. Now take for example positive economy. What is happening? It focuses on facts and data. Take for example, a tax cut will lead to the more consumer spending. Well, the normative economics says that the government should focus on increasing the minimum wage. So increasing minimum wage will lead to the more consumer spending. So that is the difference between the positive economics and normative economics. Now production possibility frontier. So this production possibility frontier is a very interesting concept. Take for example, take for in our example, in India's example, if we employ all our resources in production of services, then we can say we can produce 5 trillion of services, $5 trillion of services. Now if we employ all our resources such as labor, then capital in production of goods, right, in manufacturing activity, then we can produce around 3 trillion of manufacturing activities. Now but we cannot live on only services, right? We have to produce certain amount of manufacturing goods also, right? Then what the government do, it removes certain resources from the services production to the manufacturing production. Like that, then we can get a certain mix of certain amount of manufacturing activities and certain amount of services activities. So there is various combination of we can produce when we shift the resources between these two sectors, right? So that combinations are called as production possibility frontier. That is the production possibility. Either you produce services or you produce good, or you produce both of them in a fractional, or you produce both of them in a limited quantities. Now shifting of the PPF. See, now suppose you are producing goods or you are producing services. Now there is certain innovation in the AI, or there is certain innovation service sector such as invention of AI, or certain software processes that are that produces efficiencies in services sector. So because of that we can produce more services, but there is no innovation on goods side. Hence we cannot produce more goods because there is not much innovation on this side, right? So a factor such as technological advancement, increase in the resources, or improvement in the efficiency can shift PPF outward. We can shift PPF outward and produces more services or more goods. So that is all about production possibility frontier. Now what is the opportunity cost? Now opportunity cost is as we move along the PPF from point A to point B, the opportunity cost of producing more of good Y is unit of good X that must be given up. Now what is this telling? Let me explain you with example. Suppose if you now all of the resources in economy are invested in producing the bulldozer. Now you can produce 100 bulldozers. Now suppose you want to invest all your resources in production of pizza, you can produce maximum 200 pizzas, right? That these are two extremes. Now suppose at one instance you are producing 160 units of pizza and 20 units of bulldozer, but you want to produce more bulldozer, right? So you shifted some resources from production of pizza to production of bulldozer. Now you are producing 120 pizzas and 40 bulldozers. What is change here? Now you given a 40 pizzas to produce 20 bulldozers, right? What is the opportunity cost here? You have to give 2 pizzas to produce 1 bulldozer. So opportunity cost of producing 1 bulldozer is 2 pizzas. So that is the opportunity cost. You have to give up certain amount of pizzas to produce more bulldozers. So this is the concept of opportunity cost. Take for example, you are preparing for the UPSC examination, right? Now you are investing around 12 months in learning UPSC, but at the same time you could have invested this time in doing certain kind of job where you could have earned 3 lakh rupees in a year. So that is the opportunity cost. 3 lakh rupee is the opportunity cost of preparing UPSC. Now, difference between the microeconomics and macroeconomics. Microeconomics focuses on individual economic units such as household, firm, and industries. But the macroeconomics, on the other hand, focuses on aggregate economic phenomena such as national income, where all the sectors of the economy are included. Employment scenario, what is the inflation, how the economic growth to be achieved. So all these factors are focused on macroeconomics. So what is the conclusion here? In this chapter we understood the basics of economy, including what is the central problem of economy, economic organization, difference between positive and normative economics, PPF, production possibility frontier, scarcity, then we problem of choice, then we also learned about opportunity cost, right? So this was all about the chapter 1. In the next session we will see chapter 2 in just 10 minutes. So stay tuned, do subscribe, and let me know your opinion about this lecture in your comment section. I appreciate all your comments, right? So do let me know your opinion, and thank you for watching this lecture till the end.